The U.S. president says there's a deal on Greenland. That sent markets spiking this afternoon. Let's get market reaction from Mark Luschini. He's president at Janney Capital Management. Thanks for joining us today.
Thank you.
Investors are pretty happy about the turn of events, no tariffs for European countries. But the rhetoric changes so quickly with the American president. How long could this last?
Well, as we know, given the fact that he seems to be in perpetual motion, it may not even last 24 hours, or at least it could move to a different narrative that would be equally spooky for the market. So, I mean, obviously, we've learned to deal with the predictability of the president's unpredictability, and markets, for the most part, seem to take it in stride. But I think this one was a little bit different in terms of it was a bit of a cocktail between not only the implications of a potential military adventure into Greenland and how it would invoke our NATO neighbors and allies in terms of our response, but also the fact that it coincided with the fact that you had spiking yields in Japan as the new Prime Minister Takaichi is calling for a rather robust fiscal response to Japanese somewhat lethargic economic conditions. And as a consequence of that, it roiled bond markets a little bit around the world and unsettled equities along with Greenland overtures collectively.
Okay, let's talk a little bit more about what you call a corrective process carrying on. What would the prompts be for that to continue?
Well, I think we have a couple of things at stake here. We are just embarking on a new earnings season where companies are starting to announce their quarterly results for the fourth quarter that we'll get a slew of over the next week or two. And if they fail to meet elevated expectations at a time when the multiple on the market is 22 times forward estimates, which is not inexpensive, and as well some of the skepticism that's been introduced into the whole AI narrative, that collectively seems to be hitting the tape at a time when there is some uncertainty as to what the Federal Reserve's response is going to be to some of the overtures that we're seeing to politically capture some of the associates that are either being considered or currently reside on the Federal Reserve Board.
Do you remain fully invested at this point? You talked a little bit about dealing with the uncertainty of the American president. Are you keeping cash on hand because there seems to be more volatility?
Well, we're kind of bracing for more volatility. It's actually quite typical in the second year of our presidential term. However, the fundamental underpinnings for the economy keep us pretty fully invested and constructive on equities. Economic activity in the United States remains relatively healthy, in spite of the fact that we've seen a downshift in job growth, which has been a little bit worrisome and certainly something we're keeping an eye on. But at the same time, other aspects of the economy are eliciting green shoots relative to prospects anyway for employment conditions. And so on balance, that seems to be a relatively fertile environment for corporate profits to match even somewhat elevated expectations and therefore deliver on another year of an advance in equity prices, continuing to build on this bull market that we've had now for several years running.
Mark, you like gold, and I'm wondering what weight you've given it in your portfolio and whether or not you've trimmed it given the run it's had.
We haven't trimmed it yet. Currently, we've allowed it to run. It's about 7 or 8% of our portfolio, which is not inconsequential. Typically, we would suggest a kind of a 3 to 5% weighting for most investors. So we continue to think the prospects for gold here are quite bright, given the fact that you have falling real interest rates, which typically act as kryptonite for gold prices if they're elevated. You have foreign central bank buying in copious amounts as a way to diversify away from U.S.-based assets. And of course, last but not least is the fact that we have these geopolitical flares, some of which are known and some of which seem to be introduced on a fairly regular basis. That's enough to keep investors on their heels and look for anti-dollar, anti-risk assets as a hedge in portfolios.
What about other precious metals?
Well, we've been pretty constructive on silver prices, although given the recent run, we think they're primed for a pullback, which could even be quite significant. It seems as that, though, that's become a very much a one-sided trade at this juncture. So we'd still be buyers of silver on a pullback to perhaps in the mid to upper $70 range. But at these levels, we look at it being overly extended by some standard deviations that are exceedingly unusual to see, historically speaking, and typically precede rather significant drawdowns as investors' appetites cool for the industrial metal.
Can I also get your take on the energy sector? There was so much interest last year because of AI data center build out. You're seeing some of the natural gas moderation because of a sort of warmer winter, especially in the U.S. What are you doing with your energy investment at this point?
Yeah, sure. It's kind of counterintuitive because even though there are obvious concerns about the supply-demand imbalance relative to the capacity in the Middle East, as well as obviously the potential production that could be brought online at elevated oil prices here in the United States, oil stocks are actually performing quite well. If you look at the broad industry sector ETF that represents energy stocks XLE, or something even more along the lines of the oil services stocks, such as Halliburton or Schlumberger, they're actually acting quite well on prospects of not only opportunities perhaps that may emerge in Venezuela, but I think also the fact that I think investors have come to understand that these companies have really addressed the fact that they aren't necessarily tied with a one-to-one correlation on the direction of oil prices in order to prosper.
Yeah, I was just looking up XLE, and it did hit record highs yesterday. All right, Mark, I'm going to leave it there with you, sir. Thanks for joining us. Appreciate it.